Hi, what's up, everybody? What's up, everybody? Welcome again at Gatose FX, whereby we are discussing forex markets. And since we were ended in the last episode, it was the part one of a fundamental analysis of forex. Today, we are proceeding with the second part, whereby we are going to break down all those forex news. Okay, first of all, I don't need to introduce myself, but for the sake of others, I will. My name is Robert Geuza. I am an economist, pro trader, and mentor of financial markets, which including Forex. All right, guys. So in the last episode, we started to discuss and I was teaching about basic fundamental economic analysis, which most of you folks, you call it news. And these news, they are assisting us when we are making analysis in the financial markets. Of course, they can affect most of the financial markets, not only forex but others as well. So from the previous episode, I just made a foundation as to the origin of money, and where is the relationship and the link between forex news and forex chart. And just to make a simple overview, it is just that we are very much concerned with forex news just because they are directly relating with our financial markets, from the basis which I made from the last episode, that we are trading currency. And currency is money. Money is just a piece of paper which represents the values of goods and the services produced in the economy of a particular state. So when you get into trade, you are trading a pair, a combination of two different currencies from two different countries. That means you are trading the economy of one nation against the economy of the other nation. That is where the basis and the basic foundation of news comes into consideration. So since we are trading currencies and the currencies are being printed and minted by the central bank of those governments, so there is every important aspect for us to understand which organs, which authorized institutions are making those decisions concerning money supply and the economy at all. I talked very much broadly in the last episode because I made the foundation like the government has a role to play because the government is functioning to ensure there is a prosperity in the economy. And we are already in the economy which now is using this fiat money. We are no longer using barter trade for the highest cases of the financial transactions. We are using money, and the money are being its supply, demand, and the policies are being implemented by the central bank. So there is a big role which has to be considered based on the decision made by the government in relationship to the central bank. And those two decisions, which are made by the government and the central bank, are going to affect financial markets, which including forex. That's why those decisions, based on empirical data, they are released to us through different various websites, for example, like investing.com, Forex Factor, and so many and so many. So those news are purely economic performance report released by the central bank and the government to the public, so that different users can make different decisions based on those news. So today we are proceeding from where we ended in the last episode. Make sure you stick to the end and watch this podcast. All right, folks. Make sure also you follow me on all my social media so that you can get more and more videos and podcasts like this. I have my YouTube channel which goes by the name of Gatose FX, and also you can follow me in my Instagram page which is also Gatose FX. So today we are going to see at the business cycle which gives us the economic performance of a state. How do the economic performance of a state have and its fluctuations, of course, affect money supply, affect the demand of a currency, affect the strength of a currency? Since I said before, the role of the government is to ensure there is, of course, peace and security is one of the very, very important aspect of each and every government in any state. That is the number one role, which is very important, because without harmony and peace, no production can be done in a good way. And the other aspect, which are directly relating to our financial market, is economic stabilization, economic prosperity. In a state where the economy is prospering, production becomes well performing, jobs are being created, and so many economic aspects are affected, which we are going to discuss later in these episodes. And those aspects are the ones which gives us news. News are released in the periods of time. There are some news which are released each month. Others are released after each quarter, and others even annual. So it is the role of the government and the central bank to release news, economic performance of a state to the public, so that the public can make various decisions. So the government has a law which is to ensure there is stability of the economy, and also there is stability of the price. These two things goes together. You have to work in order to ensure your economy is performing good. You have progressive economy, or we can call it oh my God, take a pause. The role of the government in the business cycle is to ensure that there is economic prosperity in the economy. And when I'm talking about economic business cycle, I mean the fluctuation of the economy. Economy cannot be constant at all time. You cannot have a stagnant economy at all time. You cannot have a depressed economy across the whole time, or you cannot have a prosperity economy across the whole time. The economy goes in the fluctuations. You can have sometimes a prosperity economy whereby we call it that you have an expansionary economy, or you can have a stagnant economy, or you can have a depressed economy, depending on various factors which can contribute to those business cycle. So the expansion of the economy, the depression of the economy, or being constant, it is what complete economic business cycle. And this has a very direct relationship with Forex. If you go to the Forex charts and look at the pairs, especially in the higher time frame, if you look at the 12 months, 6 months, 3 months, 1 month, even 1 week, you can even see in a course of period of time, a number of months, the price goes up, the price goes down. That's why we get those bearish and bullishness. This is all because there is an economic fluctuation in the economy. The basic behind is economic fluctuation in the economy, because we are trading money. Money is just a representation of total value of goods and services produced in a state. So if the economy goes in prosperity, there is a higher probability of your currency to increase its value and its demand, unless the country voluntarily decides to devalue their currency. That's the other subject which I will not talk about it today. So how comes it is important to know economic performance of a state in order for you to make decision in the financial market, and especially Forex? Because in the chart, you don't see this GDP, you don't see taxes, you don't see anything, you just see the candlesticks. It is very important. It is very important to understand who is the big shark in the sea. Central banks are one of the highest liquidity institutions which are also engaging in the financial markets, including Forex. So we have to understand, how do they make decisions? How do they make decisions? Because they have highest level of liquidity, they can influence the price to go bullish or to go bearish based on various factors, because they know fundamentals and they know also technical analysis. So here in the fundamental, this is a professional issue. This is purely economic science. We have to get to understand, and that's why we have been advantages to have been released with this news in the various websites so that we can know how the economy of different countries is performing and how can we make decision based on those economic results and reports as being released by the authorized legal institutions. Basically, it is the government and the central bank. Now, if money is a representation of the value of goods and services produced in a state, and the total value of goods and services produced in the state, including the total spending of a state, can be represented through government budget of a particular nation. When you see the government budget of a particular nation, when you see the gross domestic product (GDP) of a particular nation, is just a reflection. Is a reflection of the economic performance of a state. How valuable are their goods and services produced in a certain given particular period of time. So we cannot ignore these components, economic components in the relationship to forex, because the higher the level of the economy you have, probably the higher the demand of your currency will be and the strength of your domestic currency will be. So if there is the highest demand of your domestic currency, probably your currency will become bullish in the financial markets. And if there is the lowest demand of your domestic currency, definitely your currency will become bearish in the foreign exchange market. Make sure you stick to the end. This is Gatos FX. All right, folks. So if now we have got to understand the relationship between forex, the economy of the state, and the organs responsible in making those decisions, which I have mentioned earlier, the government and the central bank. Now we need to understand that when we go to the websites and see those news, there is a plenty of news. There's a number of news, more than 100 news, but at least we have at least 50 number of news which are genuinely reported by each and every central government of the states. But there are some of the economic reports makes forex pairs to be highly volatile when those news are released. And some of the news, they are important, of course, in terms of economic, but in the forex market, they don't have any higher volatility or higher impact on our financial markets charts. So we have got to understand which news has higher volatility, and how it has an impact to the economy, and how does it affect pairs on the foreign market charts. And also we have to understand which news have got lower volatility, but what's the implication on the economy, and how does it affect the foreign exchange market. So in order to grasp all those concepts, we have to understand what are the parameters of economic business cycle. What indicators we are using to measure economic fluctuation, economic performance, economic comparison between one state and another, or within the state but at different particular period of times, maybe monthly, weekly, annually, quarterly, 3 years, and whatsoever the range we want to have. So this is very important to understand, because this is what going to be represented in the news, and we can make decisions just as the central banks do make decisions based on these numbers. Because when you see there is a prosperity of the economy, we probably expect the strengths of that particular country to become the current strengths will become stronger. So it depends. You will take the strongest currency against the weakest currency. Depending on these fundamental issues, economic reports released by those two states, you can make decision. Fundamental analysis tells us why price moves from one point to another. And the technical analysis tells us now the price will move from X exchange rate to Y exchange rate, or from point A to point B. Now let's get back to the to just take a short overview of those parameters which are used to measure business cycle or economic performance of a particular state. One of those parameters is GDP. GDP is a gross domestic product of a nation, which is a summation of total value of all goods and services produced within a country in the diaspora, excluding foreign investment. So when you see GDP is higher, that means the production of the state has become positive, or is in a good prosperity. The economy is doing good because of their productivity. All right. I will not go deep into this. And the other parameter which we are using to measure economic performance of a state is consumption, both public consumption and private or individual consumption. How do the government spend on consuming public goods or consumer goods? And how do the private or individuals do spend? Do they have enough income to finance their finances or their needs? That's another component which we look at. And the other component which we look at when we measure the business cycle or economic performance of a state, we look at the saving, both domestic saving and individual saving, which is marginal propensity to save. And then in terms of consumption, it is a marginal propensity to consume. So these are pure economic issues. I will not just go deep down today. Just for the sake of understanding what is happening with relation to Forex, I will just list them and define those which have higher impact on our financial market. So one of the parameters we are using to measure economic fluctuation or economic business cycle is a GDP of a nation, consumption of a nation, saving, also is investment, the level of investment, both infrastructures, technology, education. Does a country engage in investment to what rate? The other component which we are using to measure economic business cycle for a nation is investment, the level of investment the state or the nation is doing in terms of both sectors: infrastructure, technology, education, in financial sector, construction, and so many areas. So that's another indicator. The other indicator, which is very important and has an impact with Forex, is international trade, or we call it a balance of trade. This is the difference between export and import. Does the state import more than it exports? Or does it export more than it is importing? Or there is an equal balance. That's why we can have an excess balance of trade, whereby the state is exporting more than it imports. So when you are exporting more than you are import, we say that you have an excess balance of trade, surplus balance of trade, whereby your domestic currency will be demanded by so many states because you are the exporter. And when you export through your own domestic currency. Definitely the demand of your domestic currency will be higher. So the trade balance, this is how we lead it. We look and read that trade balance reports and they interpret. The higher the export, the higher the demand of domestic currency. The less the export, the less the demand of your domestic currency. The other aspect, which is very important and I will go very deep in it, is an price stability, which is inflation. And in the Forex news, it is represented by CPI. It has its own subtopic. I will deal with it. Price stability. How often do you face the rate of change of your prices? The word inflation by itself is very scary, but in terms of economic profession, we have the rates of inflation. There is a certain rate of inflation is healthy to the economy, and it is the role of the government and the central bank to maintain that. They maintain price stability into a certain percent, which does not exceed 3% and does not go below 0%. There will be no any economic prosperity, even if you have your GDP growing up, but still your prices, your inflation also raises up. There's no economic prosperity in those circumstances. We just want to have a higher GDP growth while we maintain a steady rate of inflation, which is within 0% to 3%. The other component which we are using to measure economic performance of business cycle of a nation is the government budget. Do you have a deficit budget, balanced budget, or surplus budget? The other important concept here we are also using to measure economic performance of a state is money supply, and that is where the role of the central bank comes. Central bank is an important organ which deals with controlling and management of money supply in a state. Because if they don't take care, they allow to have excess money supply in the economy, more than what the economy has produced, definitely we will cause inflation. And if there is low money supply as compared to the economy, we will have an economic deterioration. We will slow down activities. So it has to be balanced, and that's the role of the central bank. And when it happens, there is an excess money supply, the government has to make some decision to do that excess money supply. And there comes the power of news. The decision and the tools that the central bank will use to stabilize money supply will have a direct impact on the forex pairs. So what instruments they are using, make sure you stick to the end of this episode. Another component we are using to measure economic performance is a productivity of a state. Is a nation engaging in economic production activities? Its citizens, companies which are within the countries, different organizations and institutions, are they producing? Because if there is no production, even the value of money will become low. Because what will you go to trade? You have to engage into trade based on what you have producing, whether it's a manufacturer of goods, or whether it's a service, whether it's a technology, innovation, whatsoever. So productivity is a very important aspect to measure economic business cycle of a nation. And last but not least, and it is a very important aspect, is employment. Employment. How do the labor force, labor supply, engaged in your economy? You have a good GDP? Yes. Maybe you have a stable price? Yes. What about people? Are they employed? That's why in the Forex we have a very common news. In the first Friday of each month, United States of America releases NFP. NFP is a non-farm payroll employment change. These news are confusing so many people, but some people can trade them very good. But sometimes they can hit both sides. They can buy, they can sell, because there's something there which is just a little bit complicated. But you have to understand the essence and the relationship between employment change and the unemployment rate, because they are both being released at the same time. So we'll just look at it later on when we get into monetary policies, and we will just see the employment, how that does an NFP mean, and how can you make decision based on the NFP news. Okay, so these are at least some of the parameters which when we look at them, we can say that a nation is now in the prosperity, or is stagnant, or we have in economic depression. You cannot just say that our economy is not doing good. We'll ask you, what about the number, first of all? But number two, we'll ask you, what about the welfare of the people? Sometimes you can have higher numbers, but the welfare of the people is poor. That's not a good sign of economic performance, because the economic development, economic prosperity must also reflect people's life. Guys, this is Gatos FX. So, we have already seen the business cycle and the parameter which we are using to measure economic performance of a state, but which is the economic impact of business cycle. Now, the central bank, maybe for example, has given the report, has reported the inflation rate has raised up, let's say, from 2% to 3%. That is just a report. GDP of a state has raised up by 2% compared to the last year. We have a balanced budget. We have a surplus balance of trade or deficit, or productivity has lowered, or we have a higher number of job lost during the last quarter. Those are just numbers. We have to understand now, how do they impact the economy? What's an economic implication of these numbers? Because the economic implication of these economic financial reports released by the government and the central bank have direct relationship with the productivity of a nation and the strength of the currency of a particular state, and hence will affect forex. The pair can either be bullish, can be bearish, or can be choppy. It's just depending on this number. So it is very important to understand what is the economic impact and implication of economic business cycle reports. These reports, they can be positive, they can be negative. Being positive, that means higher than expected. That's why in the Forex news, we are released with the previous month's news, consensus expectation or forecast, and the actual number, which comes out when the really actual number is released at a particular time as it was scheduled. All right. So there is a cycle of economic implication based on economic reports. That's why I always say there is no single economic policy which only by itself, when implemented and prolonged for too long period of time, would not have caused another economic crisis. That's why we have a business cycle. The economy can prosper, depreciate a little bit, being stagnant, prosper again. And when we come to Forex pair, we can see the pair goes bullish, bearish, bullish, bearish, boom, bearish. So all this is a reflection of the economy, because the central bank make decisions based on the economic performance of a state. You understand? We read charts. Charts is just a representation of what's happening in the real economy. Okay? Therefore, there is a chain of things. When one economic aspect occurs in an economic condition, it affects the other and the other and the other, which causes a cycle. Like, this news affects saving. Economic performance can affect saving. It can affect consumption. It can affect the cost of borrowing, productivity of a state, balance of trade, demand for the domestic currency, employment, welfare and standard of living, inflation and deflation, and even GDP. So I was making a base here as to the relationship between economic performance of a state with the strength of a currency and the decision which we can make in the foreign exchange markets, which include Forex. So we have to understand the implication of reported economic reports, which are released by the authorized institutions, which is the government and the central bank. So when we hear the reports that the GDP of a state has raised up from X to Y%, how does it imply to the economy? How does it affect the economy, positive or negative? And how will it affect Forex? What decision can you make? Can you buy or can you sell? Mind you, we don't rarely make decisions based on fundamentals. We also look at technical, but fundamental analysis will become as an added confluence as to why you are taking a long or why you are taking a short trade. So there is a chain of impacts. There is a chain of impacts based on one economic results or economic decision. A single economic decision or a single economic report can have multiple effects to the economy and multiple implications to the performance of the economic activities and indicators of a state. However, it will also affect the economy and the foreign exchange markets. Just as I've given an example, if the economic reports, for example, if the economic reports are being released by the central bank, we have an inflation. There are various measures has to be taken by the central government, central bank, in order to reduce that rate of inflation. And those decisions will affect other economic factors, because once the inflation increases, the central bank will probably raise up interest rates. And when you raise up interest rates, you are going to affect saving. Saving will also increase. But what about borrowing? Cost of borrowing will increase. When you increase the cost of borrowing, you also increase the cost of production. It creates environment for redundancies. Jobs can also be lost, or new jobs cannot be created because of the higher cost of production. And once the production is lower, export become lower, demand of domestic currency become lower, productivity when is low, people lose job, their welfare also declines, political complaint will be there, and a lot of other issues. The same, if you lower interest rates, you discourage saving, but you encourage borrowing. That's how economic implication of these fundamental economic reports released by the central bank and the government affects the economy, and we see those movements in the foreign exchange markets charts. So, if this is the case, before I take you to the basic news or basic fundamental economic reports which have highest impact on the foreign exchange market as well as the economy, we have to understand the aspect of price stabilization. Price stabilization or inflation. It is very, very much important to understand how does inflation affect the economy and how does it make the central bank to make decisions which will probably affect foreign exchange markets. One of the highest challenge of the government, any government, whether the democratic or monarchy or dictatorship, price stabilization is one of the highest economic complicated tasks you have to attain. So inflation is a persistent increase of the general prices of goods and services in the economy. But not all rates of inflation are harmful to the economy. There is a certain rate of inflation which is good for the economy to prosper because it encourages investment. It attracts investors, both domestic and foreign investors. We want a certain percent of inflation. Although now, there are so many causes of inflation. Inflation can be domestically caused or can be caused by external factors. I don't want to go deep into the type of inflation, cost of inflation, but I will just give you a simple explanation of the rates of inflation, which because in the news, when the news are released, you'll just see it is written there. CPI previous months was maybe 0.1. Consensus expectation is 0.15, and the actual results maybe is 1.5. So you find just the abbreviation to CPI. CPI is a consumer price index. It's the index which we are using to report inflation. So now here, listen very carefully. Inflation rate between 0% to 3% is good to the economy. It attracts investors. When the inflation exceeds 3% goes to 3%, 5%, that is not good for the economy, because money will lose its value if it persists for so long period of time. So when you are watching at the inflation rate, make sure you understand the number. I don't want to go deep there. When we get into monetary policies, we will discuss it. But inflation which is below 0%, now it goes negative, negative 0.1, negative 2, we call it deflation. That is not good for the economy, because nobody wants to invest in an area where prices does not rise up, because you will get loss. Cost of production can increase, but what about the prices of goods and services in the market? If they are persisting going down and down and down and down, it's not a good sign for the economy. Nobody will want to invest in such a kind of economy. Therefore, it is very important to understand these numbers. Don't worry about them. We shall discuss them later. Or when you get into my mentorship course, I will deeply train you about these things. Guys, this is Gatos FX. Make sure you follow and subscribe into my social media, YouTube channel Gatos FX and Instagram page Gatos FX. All right, folks. So for today, we are ending up with just an introduction of the policies which are implemented by the government and the central bank in order to bring about economic stabilization, economic prosperity, and price stabilization to the economy. The economy does not run by itself. The government is responsible in controlling the performance of the economy of the state. How do the government perform? How do the central bank perform? What instruments are they using? What policies are they implementing to affect and bring about economic stabilization and price stabilization? What are the difference between the two? And those decisions and those instruments which they are using, how are they going to affect the Forex? How can you make decision to buy a pair or to sell a pair based on the released news, which are the economic reports or economic decisions made by the central bank and the government? Today, I will just narrate the role of the government in Forex. To bring about economic stabilization and the price stability, the government uses the policies which in our economic science we call them government fiscal policies. Government fiscal policies, these are the policies implemented by the government in order to bring about economic stabilization. They have only two instruments which they are using. Simply tax and the government spending. In a certain economic condition, the government may raise tax and lower government spending in order to attain a certain economic objective the government intended to. And in a certain economic condition, the government may lower tax and increase government spending in order to attain a certain economic condition they intend to. That's why I said previously, there is no single economic policy which would prolong for a long period of time without causing the effects of the other economic aspect or without being adjusted and imply its counterparty policies. In economics, we have expansionary policies and contractionary policies. These policies has direct impact with Forex. And that's why in foreign exchange markets, especially in the Forex charts, we experience fluctuation of the price. The price goes up, goes down, goes up, goes down, goes down, goes up, purely due to these fundamental reasons. So, the government policies, fiscal policies, has two categories. We have expansionary, dovish policies and contractionary, hawkish policies. So when we want to tighten the economy, the government will use contractionary or hawkish policies by raising taxes and lowering government spending. And when the government wants to release money to the economy, they will imply dovish economic policies by lowering taxes and increasing government spending. That's why in the Forex we also listen to the speeches of the head of states. A normal citizen cannot talk about raising tax if you don't have that authority. But if depending the nature of the country, the finance minister can give reports concerning tax. The president, the prime minister, and depending on the nature of the state, with which organ has that authority to talk about these things, the parliament. So economic condition and the objectives of a particular period of time can make the government take either hawkish decision or dovish decision. In order to understand this, make sure you get a full course mentorship from Gatose FX. Guys, the end of one episode is a good beginning of the next episode. This is the second part of a fundamental analysis breakdown. My name is Robert Geuza. I am an economist, mentor, and pro trader of financial markets. I welcome you for mentorship at Gatose FX, but also follow me on my social media, including my YouTube channel, Gatose FX, and Instagram page, Gatose FX. Meet me next time when we proceed with monetary, financial policy, and the relationship with foreign exchange market. Welcome again at Gatose FX. Thank you. Usijarekodi.
Haina shida.
Huku kumejitosheleza.
Hiyo shida.
Weka kabisa mambo yakae sawa.
Basi nitumie.
Jaribu sana.